PayPal. Let's talk about that company, let's talk about that stock. Because the last couple of days, of course, with the earnings report and especially with the earnings call, there has been a lot of talk on YouTube, on X, in the financial world about what has happened. The company reported, in my opinion, in my eyes, a pretty solid earnings report. The problem was the earnings call, more specifically also a guidance. We covered already the earnings report on this channel, so I'm just going to show you here the major overview. You can clearly see that Q4 was a solid quarter, GAAP and non-GAAP. From free cash flow, from net income, from net revenues, all of it was pretty solid. Now, what did surprise me is this. No, it's not the fact that active accounts have come down yet again. This was actually what I predicted in my pre-earnings video. It is also not surprising that number of payment transactions went up. Same with payment transactions per active accounts continues to go up as well. Again, their focus here is on quality and not quantity. Of course, you would love their user base to grow in the future. But since we just had a pandemic not so long ago, whether you like to remember it or not, they attracted a lot of users that basically is costing or has been costing them too much money. If a user does not transact within PayPal's ecosystem, it is a user that is not worth it for PayPal to keep. And so we are seeing that number go down, but what we are also seeing is the payment transactions per active accounts continues to go up. A very important metric to follow. Then, the most impressive number for me in this quarter was the fact that transaction margins have gone up. My prediction was that we were going to go down just a tiny bit for this quarter, and that would be the bottom, but it does seem that last quarter at 45.4%, that was the bottom, and now we're up around 0.4%. Okay, pretty positive. But unfortunately, during guidance, during the earnings call, that number might have been maybe not a one-time thing, but I would have assumed that since we might have reached the bottom, we are going to see some improvements moving forward. Right now, in my opinion, that would not be the case, or at least that's the message I got. Now, with regards to transaction expense rate, went up quarter over quarter. They expected that, they told us that already in the other earnings call, so I'm not surprised seeing that being up. Now, I want to go over my response. This was a message actually to Alex Chris, because I know he's been quite active on X in recent weeks, especially in anticipation for the first look event, which of course did not shock the world. And by the way, for those that still didn't understand, this was not an investor day. Not at all. Investor days usually include financials, guidance, business performance, stuff like that, not product announcements only. This was, in my opinion, just an event for their merchants, which, if that was the case, a pretty successful one. I shared my opinion on all the product launches already in another video. That video will be in the top right corner. We're going to talk about 2 product launches later on in this video. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, to check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, let's move over here to my response, my reaction after the earnings call. So I start by saying it was a very good report, but a bad and honestly very underwhelming call. The fact that it was a good report and that the company's financials are very solid made the call even worse. I don't understand the lack of energy and excitement from management during the call, when not so long ago the first look event was supposed to shock the world. How come you give us guidance that barely reflects any growth and yet continue to talk about all the exciting products that PayPal is working on? Sandbagging? Maybe, but this is way too low. Also, buy back more shares. Yes, the company mentioned at least $5 billion for 2024 with regards to buybacks, but why not come out with a figure like $7 billion to show some confidence? Also, why did they only buy $600 million worth of shares in Q4? Why not more? You see, it's all about messaging. It's all about playing the Wall Street game. Maybe management still has to learn that a little bit. They've got the cash. They're going to generate more cash. The stock is cheap. So why not? My opinion is this. Alex and the team realized that there is a lot more work to be done than expected. This quarter came 6 months too early to actually show major improvements, and they're trying to be nice about the fact that maybe more cost cuts are probably on the way. It's just my opinion. A company like PayPal in 2024 needs to be leaner. The messaging needs to be better, much better. Alex Chris, you are now the CEO of a very profitable business that the market is valuing like a tobacco company. Buy back more shares, issue a special dividend, look to go private, hit the public market, don't see the value. And as Brad Gersner from Altimeter Capital said, one thing we will not do is stick around and try to change the board or management if they lack the commitment. He said that because they have a stake in PayPal, and I agree, we as retail investors, we shouldn't really stick around for much longer if we don't see any signs of improvement. Now, I've already seen some people talk about the fact that they want the CEO out. Why? The guy has been here for what? Maybe 2 quarters? Do you think that in 2 quarters you can change the whole software suite, the whole culture at a company like PayPal? If you think that's the case, maybe you shouldn't be investing in fintech or software companies, because it does take much longer than just 2 quarters to change something like that, especially at a company like PayPal, which is a huge global financial company. Now, let's jump into the earnings call and touch on a couple of things that were mentioned there. Again, my problem, I think most investors' problem here was the fact that the earnings call was underwhelming and that guidance was very, very weak. And so, the first thing I want to touch on is a focus on what comes next. We know that Alex Chris' experience comes from small to medium-sized businesses at Intuit, and so the focus here yet again, as we've talked about before, on small businesses. We're on a journey to move from a variety of standalone products to a modern platform with a comprehensive suite of solutions. What this means in 2024 is that we're focused on accelerating the adoption of PayPal Complete Payments, or PPCP, the worst name ever, through a reinvigorated go-to-market approach for partners and developers. And this is something that when you think about it, you say, what did the previous management think when buying all of these standalone companies, building those standalone products? What did they think? Did they really think that this is going to work now in a world of unified platforms, in a world of ecosystems that work perfectly with each other? Just doesn't make any sense. And so, continuing here on the conversion aspect, they're converging to a single merchant reporting system so that our merchants will get consistent and accurate reports, which will make a huge difference in how they run their business. Another outcome of consolidating platforms is that we will now see one view of the customer, which allows us to more effectively cross-sell the various products we offer. I wonder where they got that idea from. Maybe a closer look at Adyen could help you answer that question. And then let's talk about the outlook. So they expect full year 2024 non-GAAP EPS to be roughly in line with prior EPS of $5.10. Underpinning our outlook, we expect roughly flat transaction margin dollars. Alex discussed our innovation and product enhancements earlier. Many of these are already in pilot or launch, but will require execution throughout the year before we begin to see impact. Our guidance includes minimal impact from these initiatives. By the way, the non-GAAP EPS guidance now also will include the stock-based compensation expense. Another reason why they are being a bit conservative with regards to guidance is because of the high interest rates environment. Right now, that's a tailwind, but they say here that will be much less significant in 2024. Then Alex got asked about the current state of the tech stack for PayPal. Being a big company, maybe they do more cost cuts to move faster, better innovation, stuff like that. He was, again, very, very honest here. Look, I'll be transparent. The company has gone through significant growth over the last years and a lot of acquisitions. We have not invested enough in creating a single platform. That again slows us down when it comes to innovation. And it slows us down when it comes to being able to leverage the data across the ecosystem. We're investing heavily in that now and starting to see real improvements. Again, I have to go back to Adyen. When you have a unified platform, vertical integration, usually you can move much faster than the competitors. But I'm happy that he admits the struggles, and I do think, again, it's what I said at the start of this video, that this quarter came 6 months too early. I think they all figure out right now that, well, there's a lot more work to be done, more than we thought at first. Okay, I'm willing to give them another 2 quarters. Again, I'm not here just for funds and giggles. No, I'm here to make money. I'm here because I think that PayPal is extremely undervalued, and I'll repeat this a couple of times now. And I think that if, a big if the company managed to execute quite well, this is one of the best opportunities out there. Of course, if they do not, I'm out. And last thing here, this is also something that they've picked from one of the competitors out there, aka Shopify as well. We are creating a no-code, low-code experiences so developers can take the demand that they've shown because they have best-in-class experience now and get into the market. So step 1 is I'm very focused on that branded experience. They talked about the, let's say, most exciting new innovations, focus for the company, should I say, branded and unbranded. But again, creating no-code, low-code experiences so developers can take the demand that they've shown because they have a best-in-class experience now and get into the market. A lot of people forget that PayPal is used worldwide. They have over 400 million users and over 30 million merchants. So you get exposure to a large base of users, of merchants as a developer. Now that it's made easier for you to develop on that platform, why not? Good for the developer, good for PayPal, good for the merchants, and good for me as a user as well. Win, 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 win. And so, right now, if we look at the graph, this is on the daily chart. Of course, after the earnings report, stock crashed around 10-12% or so. Even with that, we are still not oversold. But we are now in an area where previously, as you can see here back in January, we ticked down a little bit, then rebounded. Back here, November 2023 was a small base-ish of support, rebounded from there. And well, let's see what happens in the coming days. If we look at the weekly chart, of course, there might be a better opportunity at around $50, $52 or so. That's where we previously have bottomed back in October of 2023. Remains to be seen if we go even lower, because if we look at the moving averages, we're now well below all of those. And so to conclude, I'll repeat, good quarter, solid results. Financially, the company is extremely stable, actually more than that. But the problem here was messaging. Previous earnings call, Alex Chris, very, very excited, very, very positive. Then comes out, talks about shocking the world. First look event, bad messaging there. Did deliver for merchants, good innovations, fine. But the messaging has to be a bit better, because you cannot be all excited and then give us this kind of guidance and be as sleepy as they were during the earnings call. It just doesn't work. That's not how you play the Wall Street game. Of course, you might say, I don't care about Wall Street. It just gives me a better opportunity to buy more shares of PayPal for cheap. Okay, I can agree with that. It also gives PayPal, by the way, a better opportunity to buy back even more shares at a cheaper price. Right now, that $5 billion can roughly reduce 8% of the company's shares. So yeah, that is a positive. But moving forward, maybe temper the expectations, under-promise, over-deliver. Maybe that's what happened right now in the earnings call. Remains to be seen. I think there's still a lot to be excited about with the changes, with everything that we've been hearing, but it will take some time. Now, whether you believe it or not, that's up to you. You can sell your shares right now. Should have never entered to start with, actually, if you think that in 2 quarters a new CEO can change the whole PayPal thing. But okay, we live and learn. Right now, I have no intention on selling. I have no intentions on buying. Actually, right now, I am break even. My average is around $56, $57. So I'll wait and see. But like Brad Gerstner said, I'm not going to be here to start and be an activist. I'm not going to be here to be a cheerleader for much longer. If I don't see major improvements, then I'm out. We're here to make money, right? Not to be bag holders. So that will be it for this video. If you enjoy this type of videos, and of course, do share your opinion down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you're not, and I'll see you all in the next one. Bye-bye.